I'm Paul Sanger for the Finance News Network, and today I have the pleasure of speaking with Jonathan Fisher, CEO of Cauldron Energy, an ASX-listed uranium company. Jonathan is highly respected among the Australian investors for his deep knowledge, insightful perspectives and clear understanding of the significant role that nuclear power plays in decarbonisation. Jono, welcome to the network.
Thanks, Paul. Thanks for the kind words. A bit overstated, but happy to take them.
Now, Johnny, let's get straight into it. I've got you in here today. Overnight, there was significant news out of the US regarding uranium. The US government has enacted a ban on Russian uranium imports. Can we kick off by you providing us some insights into this decision and its obvious implications?
Yeah, so this ban has been a long time coming. It passed the House probably 3 months ago. It's been stalled in the Senate by Senator Ted Cruz. It's all part of, trying to defund the Russian war machine in response to the invasion of Ukraine. The US has put in place a whole lot of sanctions across a whole lot of stuff, but to date had avoided anything to do with uranium or nuclear fuel. Frankly, because it's really difficult to run the Western nuclear fleet excluding Russia. And specifically, not Russian uranium, but Russian enriched uranium or fuel sources. But they've finally done that. Last week, President Biden threatened to implement the ban under executive order anyways. That unblocked the Senate and it got through last night.
And look, given that US nuclear power plants predominantly rely on Russia for about 12% of the uranium needs, what impact do you foresee this ban having on the global uranium market?
Yeah, so it's 12% of the uranium coming from Russia, but 25-ish% of fuel sources, so enriched assembled fuel sources. So they're a huge supplier into the US market. And look, it is going to be very complicated the way all this flows through. Net positive for Western countries and Western suppliers like Australia, but just bear in mind it is the way that the flows happen is extremely complicated. A couple of things that will happen is everyone's reactors will find their fuel. But the fuel sources will have to, the way that the uranium and the fuel flows through the global system will change. So some stuff will then now go to China and the stuff that's going to China will go to the US, for example. That creates more friction and it will increase price. But I think, the biggest impact we're going to see immediately is that, as I mentioned, this ban has been sitting there for a few months. What that's meant is people haven't wanted to trade in spot, or utilities haven't wanted to really contract because they wouldn't want to contract for a fuel and then realise that a few months later it's banned. So everyone's been staying out of the market. You've seen uranium drop from $110-ish down to about 85, 86. With this certainty, people will now be able to plan, and you'll see more demand and trading coming back into you, and that'll push the price up. It's already back up to about 93.
You said it took 3 months really for this to come to fruition, so clearly thought's gone into it. The market has obviously sat back and have been waiting for these events. It's going to be very interesting how the next days and weeks how this
there are a few interesting parts in the ban. There's a transitional arrangement out to 2028 where certain utilities, if they're in trouble, are allowed to import lower enriched uranium from Russian sources, if they get an exemption. The reason they've chosen 2028 is because actually the US has got some more domestic enriching and fuel capacity coming online in 2028. So, the US has thought about that and said, well, okay, we'll have this transition arrangement to 2028. If you were a sort of game-playing person, you might think Mr. Putin would not be too pleased with being gamed like that and say, transition arrangement out, let's cut off supply today. If that happens, that would be a black swan sort of market discontinuity event because without any possibility for transition arrangements, you'd expect there'd be a few Western utilities that'd be a bit freaked and scrambling for supply, which would push up the price. And in fact, a couple of commentators say it would probably go no bid. So.
And let's be honest, past Putin behaviour would suggest that this is, it wouldn't be unfathomable event. You would expect a reaction, so we better watch that space closely.
And he plays hardball. the Russians have been a leading supplier of nuclear fuel. It's one of the things that they've clearly led the world on in the last sort of couple of decades. So, this will be a hit to them, and let's see how they respond.
Let's watch that space. Let's just shift the focus now to Cauldron Energy. How do you think this news might affect your company?
Well, everyone knows by now probably I'm leading the charge to change the uranium ban in WA. And I think this is really fundamental for it, because what it shows, and it'll show to the WA government, is that bifurcation in the nuclear market is here to stay. If the US and EU and the rest of the people they will have consulted before implementing this, if everyone was intending to go back to the status quo in a year or two, they wouldn't go to this trouble, right? So bifurcation is long term, and that means that throughout the value chain, so fuel assembly, enrichment, conversion, and all the way back to uranium mining, people are looking to secure that from politically aligned nations, right? And so therefore uranium supply from first world jurisdictions such as Australia becomes all the more important in the long term.
So you kind of answered my next question. Considering the ban, do you believe there will be increased pressure on the WA government to reconsider the uranium ban? The answer pretty much.
This is just the latest in a whole string of positive factors saying this ban needs to be revisited, right? I mean, there's fundamental economics. There's helping our global partners decarbonise. We've got a moral obligation to do that. The golden goose of iron ore is cooked in WA, and the government's going to need funding. So this is just the latest, I think the WA government will need to take a real hard look at it.
And from a time frame perspective, I know it's how long's a piece of string, but if they do have a change of heart, how quickly could that be triggered?
So they can change that policy
anytime,
very quickly, because it is, to be clear, a policy of the party, not a legislative ban. Yep. So it can be done very quickly. And we are not the most advanced of the WA projects. There are others that are actually in development works. But for us, we would be, on news of that ban and lifting, and frankly our share price going through the roof, we would be tripling down on expenditure to accelerate our pre-development works to get into production, yeah.
And in the broader context, how significant would the removal of the WA mining ban be for our allies reliant on uranium for nuclear energy?
So it's interesting, because the biggest producer globally is Kazakhstan, roughly 50% of the world market, a little bit under. And the Kazakhstani major producer, which is Kazatomprom, has been absolutely marketing to the world over the last few months, while this sort of ban has been mooted but stalled, that they're not Russia, that, hey, we're Western friendly too, not wanting to be cut out of that market. But certain people, parts of the market see through that, and a lot of the Kazakhstani production is actually tied up in JVs with Rosatomoprom or through Russian conversion and enrichment contracts. So there is that issue there. So Australia has the world's largest uranium resources, and WA has a good chunk of it. A lot of it does sit at Olympic Dam in South Australia, but WA has got big resources. From a jurisdictional perspective, there's no reason why WA itself can't be in the top 2 or 3 producers globally, and 15-20 million pounds plus is not out of the question in the longer term. So very significant. WA could supply 10-15% of the world's market.
And just to say that the WA does lift that ban, how swiftly could Cauldron Energy move to initiate uranium production?
Well, yeah, so we would be very swiftly raising some outsized funds to go and accelerate works. We've delivered a cracking scoping study. We've got a big exploration target, which I'm actually going to drill in the next sort of few weeks. We've probably got a few years of finalising. So we've done the scoping study, but got to finalise the feasibility study, do all the other pre-development works before we get into production. But yeah, we would be it would be a transformational event for the company, that's for sure.
And I'm no doubt a queue of people looking to knock at your door to help you finance that acceleration.
Yeah, absolutely. Yeah, capital raising hasn't been an issue for us. Recently, we recently did a premium to market placement, which everyone seemed to like. But people are there because you've got the uranium market, which is probably the one commodity market which is still really positive at the moment, And because of this discontinuity of the potential of a WA policy change, there are outsized returns there possible. There's risk associated with it, yes. The smart money says there's no doubt the policy changes. The question is how long it takes.
And just to finish up, obviously we talked that uranium's been on a bit of a charge. I had a pullback recently, which you've talked. We're now seeing some results come out for some of the producers. I'd love to get your thoughts. Cameco results came out, and there was kind of a mixed sort of views on those results. Can you sort of talk to me? Why was that?
Yeah, I mean the whole market sort of scratching their heads at that one. Cameco reported Tuesday night, Aussie time. And Cameco is in a difficult position because they were obviously very large and they've maintained production through the down cycle in uranium. And they've done that by contracting. And so they're now stuck with a forward order book where they have basically zero exposure to upside in pricing.
It's like gold hedging.
Yeah, essentially. In fact, Cameco has been buying spot at $87 and selling it back into their contracts at 57. So they're negatively exposed to prices at the moment. So that's hard for Cameco. That's a negative for Cameco itself, and they trade off pretty hard. But for the rest of the market, again, mixed bag. You saw Cameco's production out of North America, out of the Canadian assets, Cigar Lake, McArthur River, to be quite strong. So they say they're going to hit their 2024 guidance. But they've also got a Kazakhstani JV that's operated by Kazatomprom. And actually, those numbers were pretty weak. Okay. And the market's sort of like that because they're saying, okay, well, the reasons that Kazatomprom's JV with Cameco were weak were things like sulfuric acid. Yeah. Well, that's kind of applicable across Kazakhstan's portfolio. So people are starting to say, okay, well, let's apply this across Kazatomprom for 2024. And you've got Kaz numbers coming up in a little while, and people are starting to think, well, those numbers are not going to be looking very good. And then, to add icing on the cake, Kazatompром's CEO came out and said, you know what, we've got no interest in increasing production. So for years, multiple years, he said that. So given that they're such a substantial producer, that sort of suggests to the market that you're not going to have a flood of new pounds coming in from Kaz.
Jonathan Fisher, absolute pleasure to have you in here today.
Always fun. Thanks, mate.